Welcome, ladies and gentlemen. My name is Peter Youssef, and together we'll be going through a webinar about the coming week in the financial markets. Before we start, though, I'll let you read our risk warning and our disclaimer for a couple of seconds. Now, before we start, just bear in mind that with Fed policymakers split as to whether the jobs market or inflation should be watched out for, focus for next week is placed on the release of the US employment report for June next Friday. As for other financial releases, we note on Tuesday UK's nationwide house prices for June, on Wednesday UK's final GDP rates for Q1, and on Thursday Japan's Tankan indexes for Q2. On the monetary front, we note Sweden Riksbank's interest rate decision on Thursday, while various policymakers from around the world are planned to deliver speeches throughout the week. On the fundamental side, the path of the pandemic, the recovery of various economies, and the different pace could continue to influence the market's mood and direction. Moving now to the US dollar. Now what we're seeing here is the USD Index for our chart. Note how practically the index has started to drop once again after a brief pause around midweek. We tend to maintain a bearish outlook for the index. Important levels to keep an eye out would be the 91.30, which served us as a resistance line practically back around mid-June. Even lower, we would highlight the 90.75, which served also as a resistance line back on the 12th of May, and lower than that, the 90.30, which provided considerable support, especially around the 11th of June. To the upside, we would highlight the 91.75, R1. Even higher than that would be the 92.30, which is the highest peak in our chart, and even higher the 92.75. Moving now to USD's fundamentals. Now, despite USD stabilization in the past few sessions, as we have noted, it's about to end the week lower against a number of its counterparts. The strengthening of the USD due to the Fed's hawkish shift seems to have stopped, at least for now, and the market seems a bit puzzled. It's characteristic that on the monetary front, Fed policymakers seem split about the bank's priorities, given that some, like Dallas Fed President Kaplan, tend to highlight the risk of inflationary pressures, while others, including New York Fed President Williams, note that a high number of jobs has still to be revived. Thus, high focus is placed on both ends, inflation and employment market, increasing the importance of the release of the US employment report for June on Friday. As for other financial releases, USD traders are not to remain idle. As on Tuesday, we get the US consumer confidence for June. On Wednesday, we get the ADP national employment figure for June. And on Thursday, we highlight the weekly initial jobless claims figure, as well as the ISM manufacturing PMI reading for the same month. As we mentioned, the highlight though of financial releases is expected to be the US employment report for June on Friday with its NFP figure, and could create considerable volatility for USD pairs as well as stock markets and gold. As for the greenbacks fundamentals, we note the bipartisan support for the new US infrastructure plan of $579 billion, which tended to provide some support for the US stock markets, as it would include investments in the power grid, broadband internet services, and passenger and freight rail. Should the fiscal stimulus be passed into law, especially should it be increased by the reconciliation procedure to $1.2 trillion, it could accelerate the recovery of the US economy and thus provide some support for the USD. Now moving to the pound, and this would be cables for our chart. Practically, cable has been maintaining a downward shift despite once again some stabilization around the 17th to the 22nd of June, somewhere here. I would highlight to emphasize the possibility of a downward shift that practically the 50 moving average is drifting further away from the 200 moving average after crossing a bearish cross, while the RSI indicator below our chart has a downward slope and remains below the reading of 50. Now, important levels to keep an eye out would be to the downside the 1.3845, even lower than that we have noted the 1.3670, and lower than that the 1.3525. To the upside we would highlight the 1.3990, which capped the pair's ascent on the 23rd of June. Even higher than that would be the 1.4145, which served as a support line as well as a resistance line in the past 2 months. And higher than that would be the 1.4275. Moving now to the pound's fundamentals, and with no time to waste. Now, sterling weakened against the USD, Euro, JPY, and CHF yesterday, as BoE kept its bond buying program as well as its interest rate unchanged, with the latter being widely expected. BoE's Monetary Policy Committee voted 8-1 to keep its government bond buying program at £875 billion, as well as its £20 billion corporate bond purchasing program to remain intact, which showed that BoE's chief economist Andy Haldane remains alone in his call to curb the program. The bank stated that inflation could surpass 3% as UK's lockdown economy reopens, yet the acceleration is expected to be temporary by the bank. Thus, BoE's policymakers favor to keep the stimulus in place unchanged. There seems to be no intention for the bank to tighten its monetary policy for the time being, and that tended to weaken the pound, while we highlight the speech of BoE's Governor Andrew Bailey on Thursday for any further clues. On the pound's fundamentals, we note that the Delta stem of the pandemic is threatening UK's recovery with a new high of over 16k new cases in a day, not seen since the 7th of February. As for financial releases in the coming week, we single out 3, namely the nationwide house prices for June on Tuesday, the final GDP rates for Q1 on Wednesday, and the final market CIPS manufacturing PMI for June on Thursday. Moving now to the Japanese yen, and this would be USDJPY for our chart. Note the clear upward trend line, which is being maintained throughout the past few months from the pair, despite even some weakening over the past day. Now, important levels to keep an eye out would be the 110.90, which tended to cap the price action of the pair in the past 2 days. Higher than that would be the 111.70 and even higher the 112.25. To the downside, we highlight the 109.95. Lower than that would be the 109.25, which served the pair rather well, and that would be from the 7th until the 9th or 10th of June. Even lower than that would be the 108.35, which was provided practically at the beginning of our chart. Moving now to JPY's fundamentals, JPY seems to continue to lose ground against the USD for a 3rd consecutive week, despite USD's weakening. It should be noted that the Japanese currency also retreats against the common currency, yet not the pound. On JPY's fundamentals, we highlight the importance of the Summer Olympics and the difficulties still present in organizing them as posed by the path of the pandemic in Japan. It's characteristic that even the Japanese Emperor Naruhito has expressed his worries about the situation. It should be noted that the media reported that only 16% of the population has been vaccinated, and that Japanese government seems to intensify vaccination efforts, especially in the capital Tokyo and Osaka. Yet it may prove to be too little too late, given that the Olympics are to start on the 23rd of July. On the monetary front, we note the release of the summary of opinions for BOJ's meeting in June on Monday's Asian session, which could provide further clues on how dovish the bank's intentions are. As for financial releases, we note the release on Tuesday of May's unemployment rate and retail sales growth rate. On Wednesday, we get the preliminary industrial output growth rate for May. And on Thursday, we get the Tangan indexes for Q2, which may be the main release from Japan in the coming week. Moving now to the common currency, and this would be Euro USDs for our chart, also having a slight upward motion here, practically beginning since around the 18th of June. The pair seems to be aiming for the 1.1990, which is the first level we note to the upside. Higher than that, we note the 1.2090, which proved to be a support practically back on the 13th to the 14th of June. Even higher than that, we have the 1.2175, which tended to trouble the price action of the pair, both to the upside as well to the downside throughout June and May. To the downside, we highlight the 1.1885, even lower than that would be the 1.1785, and even lower than that would be the 1.1695. Moving now to Euro's fundamentals, the common currency seems about to end the week higher against the USD, as well as against JPY and CHF. Worries about the delta stem of COVID have started to rise, also in the EU, and could pose a threat for the area's economic recovery. It's characteristic that German health officials have stated to media that the delta stem is spreading fast and now comprises more than 15% of cases for Germany. It should be noted that daily new cases in Germany tend to remain at rather low levels, though, as they do in France. Yet, should they rise, we may see fundamental worries for the recovery of the Eurozone weakening the common currency. On the monetary front, we note ECB's dovishness, as expected by board member Isabel Schnabel, which pushed back the idea of transferring the full flexibility of its emergency stimulus schemes to other standing instruments as well. Also, Ms. Schnabel stated that the recovery of Eurozone's economy seems to be strong, which provided a rather optimistic tone to her speech. Please note that ECB President Lagarde is scheduled to make statements on Thursday and Friday. And as for financial releases, we would note Germany's, France's, and Eurozone's preliminary HRCP rates for June on Tuesday and Wednesday, respectively, while on Thursday we get the final PMI readings of the manufacturing sector for June, and on Friday, Eurozone's producer prices for May. Moving now to the Aussie, and this would be AUDUSD for our chart, also maintaining a clear upward trend line, also practically boosted by the weakening of the USD. The pair has now broken above the 0.7595 support line, which would be our first support line. Even lower than that, we would note the 0.7530, and even lower than that would be the 0.7465. To the upside, we would highlight the 0.7665, even higher than that, the 0.7725, and even higher as an ultimate bullish scenario would be the 0.7785. Moving now to the Aussie's fundamentals. The Aussie seems to have stopped losing ground against the USD and is about to end the week in the greens. On the Aussie's fundamentals, we note that Australian doctors have reported a rise in the number of people cancelling their vaccine appointments amid a new wave of caution over the AstraZeneca vaccine, as reported by the BBC. The declaration of Sydney as a hotspot for an initial period of 7 days tended to increase worry somewhat. On the monetary front, we note the planned speech of RBA Governor Lowe on Wednesday. Also, it should be noted that prices of iron ore are still at high levels despite a slight decline. On the other hand, it seems that China's push to lower the prices of iron ore, one of Australia's main export products, is not enough to actually push the price of the mineral lower. As for financial releases, we highlight Wednesday and Thursday, the NBS and Kaixing manufacturing PMIs respectively for June, while on Thursday we also get Australia's trade data for May. Now moving to the Canadian dollar, and that would be USD CAD for our chart. Note how practically the downward motion has restarted for the pair after some stabilization practically midweek, thus the pair has successfully tested the 1.2320 resistance line. Now, to the upside, that would be our first resistance level. Even higher than that would be the 1.24. Note how it was able to reverse the upward motion practically on the 22nd of June. Even higher than that would be the 1.2470, which is the highest peak in our chart right now. To the downside, we would highlight the 1.2230, even lower than that, the 1.2140, and even lower than that would be the 1.2060. Moving now to CAD's fundamentals, the loonie also is about to end the week stronger against the greenback. It should be noted that the improved market sentiment tended to support the commodity currency as it is considered more risk on. However, the positive sentiment for CAD was also bolstered by high oil prices, as oil is one of the main export products of Canada. It should be noted that the drawdown reported for US oil inventories tended to support the notion of a tight US oil market and thus push oil prices higher. Also, after the Iranian elections brought to power a hardliner, the chance of Iran flooding the world with its oil seems to be distancing even further, as the deal regarding the Iranian nuclear program is also drifting further away, thus limiting further the supply of oil. On the other hand, expectations for the demand of the black gold seem to remain high, pushing oil prices also higher. As for financial data of interest for CAD traders, we would note Canada's GDP rate for April on Wednesday, and on Friday, Canada's number of building permits, as well as the trading data both for May and June's market PMI figures. Now, before we leave you, as a small closing comment, general comment, as closure, we expect the USD to remain the king among currencies and maintain the initiative over its counterparts in the coming week. It should be noted, though, that on Thursday and Friday, the intensity of USD's influence in the FX market is expected to be magnified, as there are expected to be a number of high-impact financial releases, with the crown being the US employment report for June on Friday. Now, beyond the FX market, it should be noted that US stock markets ended yesterday in the greens, with Nasdaq reaching a new record high. Should the market's worries for a possible tightening of the Fed's monetary policy ease further, especially should Fed officials sound dovish enough, we may see equity markets gaining somewhat. On the other hand, the path of the US yields should not be underestimated as a possible driver for the markets, as should they rise, we may see US stock markets, especially Nasdaq and gold prices, suffer. In the current week, the precious metal, gold, was able to stop the downfall noted the week before and stabilize somewhat. Yet, where this could lead gold prices remains to be seen in the coming week. Now, that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.